Morning, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Friday, April 4th. So right now, we are 2 days after Liberation Day, when President Trump announced a baseline tariff of 10% on all nations and individualized tariffs to those countries he believes that we have the biggest trade deficits with. And just today, China has slapped us back with their own retaliatory tariffs in the amount of 34%. So right now we are currently in a race to the bottom, much like the markets today. Red all across the screen. There really is nowhere for investors to hide. Even ETFs that typically a lot of investors flee to, like GLD, which stands for gold, which is thought of as a safe haven asset, is in the red today. There is one place, however, where I am seeing some green on the screen, and that is going to be in Bitcoin and bonds. Right now, IBIT, that's going to be the iShares Spot Bitcoin ETF. It is wobbling in and out of the green as investors are really looking for anywhere to park their cash and park their money where they can make some gains. Another place where you are going to be able to at least see some green and mitigate some of those downside losses, it's going to be in bonds, particularly in TLT. That's the 20-plus year Treasury bond ETF. It is up right now, about 2.5% as we head into midday trading. Again, investors are willing to take risk off the table and park their money somewhere where they know it'll be locked up for a very long time, and they have a lot more hopes for the U.S. economy going forward. They say a rising tide lifts all boats. Well, the same thing can be said with a sinking tide, as we are generally seeing broad market ETFs in the red, utilities, consumer staples. Again, these tend to be defensive positions. They are all also in the red. We will keep you updated on what happens with tariffs. Good piece of news that we did have, however, out today, and that is the U.S. jobs report. The U.S. actually added more jobs than had been previously expected, even though the unemployment rate did tick upwards slightly. But again, the slightly good news on jobs might be keeping that sell-off subdued.